Hello, I'm Tom Malone. I'm an economist in the office of the chief economist at CoreLogic, and today I'm going to be explaining why 2021 is on pace to be the first ever multi-trillion-dollar housing market. More money is being spent on real estate than ever before. Throughout the second quarter of 2021, the total value of residential transactions exceeded $600 billion for the third time in the past year, coming in at a total of $750 billion. These recent totals far exceed the previous peak of $570 billion in the third quarter of 2005. The value of transactions has skyrocketed despite sales volumes continuing a relatively normal growth path. In fact, sales were still well below what they were in the 2000s boom. In the second quarter of 2021, there were 1.9 million transactions, substantially less than the 2.2 million transactions in the third quarter of 2005. The biggest reason for the recent surge is undoubtedly price increases. The CoreLogic S&P Case-Shiller Index set a value 41% above its previous peak as of the middle of the year. However, this does not totally explain the rise in total sales value. Inflating 2005 prices to 2021 levels would bring the current total to $680 billion, $70 billion shy of the second quarter total. Why don't the numbers line up? The answer lies in where homes are being sold now versus 2005. In the 2000s, sales were disproportionately occurring in lower priced areas, reflecting the prevalence of subprime mortgages at the time. However, over the last year, sales have moved to higher priced areas, reflecting buyers' preferences for less dense neighborhoods and more spacious dwellings that can facilitate home office work. The combination of appreciation and relocation to more expensive areas has already led to over $1.25 trillion in transactions through the first half of 2021. Could this be the first year where transactions surpass $2 trillion? Price growth is forecast to slow down, but not fall, and sales are generally expected to increase as supply shortages abate, so most likely will be. However, this is not a certainty. With so much upwards pressure on prices, it is likely that the price difference between low and high-priced areas will grow large enough that sales will eventually reorient themselves to lower-priced areas. If that happens fast enough, we could end up with more sales and higher prices in the back half of 2021, but less money being spent in total, because the transactions are happening in cheaper places. Thanks for watching today. For more insights on recent trends in the housing and mortgage markets, please visit corelogic.com/intelligence.